Welcome to the Wade Borth Podcast, where knowledge unlocks new paths and simple steps today create powerful changes tomorrow. Let's get to it.
Hey, welcome back. We were doing a series with Beth. Thank you for joining me on the previous part of the podcast. In the second part, we're just going to continue with our conversation. It was a fascinating conversation. Thank you so much for taking the time to ask me the question, engaging with the conversation that we're hearing from the public. We're hearing from people all the time, and we just want to be able to address those questions. So again, thank you for taking the time. Here's the next segment of our ongoing series about, we call it Consumer Corner with Beth, right? So it's like, what is the consumer asking? What are our people asking? So again, thank you, Beth, for joining me. And go back and listen to the previous podcast if you haven't, but this is the next step in that series. So thanks so much.
Awesome. Thanks for having me again.
Yeah, if you want to talk about, well, I'll address that real quick. And again, in Nelson Nash's book, Becoming Your Own Banker, he makes a comment. He says, if you take all the money in the world, equally divided amongst all the people in the world, he says within 10 years, 97% of all that money is back into 5% of the hands of the people that know what they're doing with money. So when we talk about banks, like the Wells Fargo and the Chases and those people of the world, they put up a branch everywhere. I mean, I look where I live right now, I'm like, oh, a new building, it's a bank. Oh, everything's a bank, right? But if you want to talk about a scam, again, if you really want to understand, like, oh, that's a scam or it's too good to be true, look at the profitability of the modern banking system. Why does everybody know what a bank is? Because they make so much money they can advertise. I mean, they leverage, and again, this is probably a little bit down the rabbit hole, but they leverage your and my money to promote themselves. Right? They take government money to protect themselves from the downside, but then they leverage, and then they can take $1 and they can turn it into $8 or $9. That's how crazy. If you want to talk about a scam, the modern banking system is a scam. But again, read Creatures from Jekyll Island, read Barry Dyke's The Pirates of Manhattan, if you really want to have an understanding of how the current banking system works and how it was set up and that type of thing. If you want to read how you can lift yourself out of that system and how you can find financial freedom, read The Richest Man in Babylon and Nelson Nash's book, Becoming Your Own Banker. Because again, two of them are trying to expose what was happening on the banking side, and those other two books are designed to help you understand and grow in your own finances.
Yep. So
and pair it with Robert Kiyosaki's book, Cash Flow Quadrants, and or Rich Dad, Poor Dad. So, but that's, to me, is the real scam. Is like, and why does everybody know about a bank? Because you can't help but see them everywhere you go. There isn't a life insurance agency or company on every corner, because again, they're a private contract, and that's the whole thing. There's privacy. If I buy a contract with an insurance company, the only person that knows about it is the insurance company and me. So why doesn't everybody understand whole life insurance? It just doesn't get talked about. And why? Because there isn't as much money to be made as there is in the traditional banking system. That's where the real scam is.
Which is pretty disappointing when you think about the possibilities of like what you're doing, the education you're trying to give, and just the hype that's still out there that it's too good to be true. So it's definitely intriguing.
And there's probably another point to be made here as well. There are more people doing this than you can imagine. Now, when you say, like, why isn't everybody doing it? I would say everybody, there's a lot of people that are doing it. But who's talking about it? Again, if I'm financing my own family, my college education, or financing a business, or doing hard money loans to somebody else, who knows? I mean, that's my business. I'm inside my business. Who sees what's going on there? And how I finance it is typically through my policy loans, through this idea of the Borth family bank, right? So with that being said, nobody knows about it. But there's more. You would be surprised. I'll be in a crowd and we'll be talking about, especially if we're like in a real estate crowd, because they think a little bit more outside the box. They're just because they have to think about financing a little bit differently. They have to think about, they have to be kind of open thinkers. And so just in general terms, that crowd is like a little bit more open-minded to different ideas. And we bring this idea up, like they've all heard of it. The problem we have is they've never been able to figure out how to implement it because nobody shared these ideas with them. Like, again, the idea resonates with them, but all we're here to do is help facilitate and empower them to take action to make that happen. And so when that happens and those two come together, there's a lot more people doing this than you can imagine.
Pretty cool.
Yeah. It's exciting. Again, I get really excited about it. What I really get excited about is when there's somebody in the family goes, I want to start a family bank. I want my family to find that freedom, that sense of freedom, that sense of control, taking back control of their lives. And again, the first generation that does it, like anything else, there's some time, effort, involvement that nobody will see. And then when they go, man, how did Bob's family be able to take advantage of that opportunity when nobody else had cash? Well, that's because they had cash. They had their money stored in their life insurance policy. And when the market was down and the economy was blowing up, they're sitting there with dry powder going, I'll wait until the dust settles and I'll go collect, I'll go and walk through the garden and pick up all the deals, because they had access to cash. And that's really this idea of infinite banking, is when you have access to cash and you have a disciplined process, it's going to open you up to a lot of different opportunities.
So with the idea of it being too good to be true, a lot of people, I think, associate that to the risks involved look like, or like, do you have common things that people might think, like, this is my roadblock? This is the part that's too good to be true. Whether it's, I can't even think of a good example.
I think I probably do. I have a couple ideas. Some of the roadblocks people have, first, it starts with education. They don't know what they don't know. That's the roadblock a lot of times. Like, what does the future look like? What's the second foot that's going to drop that I'm not aware of? I mean, I ask that question all the time. Every time I go into financial decisions, like, I think it was Morgan Housel, or no, there's a book, sorry, The Road Less Stupid by Cunningham. Just an interesting comment he makes in there. He says, what's the worst possible outcome and can you live with it? And a lot of times from a financial standpoint, we don't know what the worst possible outcome is. And so that's why we get nervous. But I find it interesting is the sense that we put money in the stock market. I'm not opposed to money in the stock market, by the way. We put money in the stock market. What's the worst possible outcome? 0, 100% loss. That's only thing that they can guarantee. Let me say that one more time again. Only thing that putting money in the stock market can give you is, only thing it can guarantee is 100% loss. Only thing Wall Street can guarantee is 100% loss. Where whole life insurance, again, it's not an investment, so I don't want to compare the two. But this is the probably like it's this lack of understanding what the product is. Really I can show you what the guaranteed exit strategy is 5 years from now, 10 years from now, 50 years from now. I can lay that out today, knowing what the very least is going to be. Now, what the upside is, I have no clarity what that's going to be, but I can tell you what the very least is going to be. So the roadblock sometimes is just the lack of understanding what the product is, and then the false equivalence between this versus an investment. Well, that's not going to do 20%. Nope, it's not going to do 20%. But nor it's designed to do it either. What you do with the money will dictate where your return is. So let me just give you a quick example. And again, we've talked about this. It's like, my policy might be doing 3-4% net after fees and expenses, taxes, all that stuff. So it's a reasonable rate of return. But the ability to borrow against it, guaranteed ability to borrow against it, by the way, guaranteed ability to borrow against it, unlike a home equity line of credit, which is conditional on somebody giving you a thumbs up or thumbs down. The economic collapse in 2008, 9, and 10, right? Remember those days, right? Those are crazy. People were borrowing from their life insurance policies to go pick up real estate on 50 to 80 cents on the dollar, or 50 to 30 cents on the dollar. And there was deals to be had everywhere. And then 3 years later, those things are doubled, triple in value. Well, what's the rate of return on that guaranteed asset? It's huge, but nobody looks at that, right? But having that dry powder when things are bad, what I call the external rate of return, can be absolutely huge. But the only way you got to that external rate of return is because you had a guaranteed asset that was there. Now, where people kind of get hung up is they go, oh, I want to put my money in here. And maybe in the first couple of years, you have a little bit less liquidity or a little bit less access to cash than you would if you just keep it in a cash account. And again, that's the part that they look at. But I need people that are long-term thinkers. They have to be thinking for the rest of their lives versus in the next 2 years. If you're only going to look 2 years out, again, I'm probably not the person you want to help you with that part of your portfolio, because this is an asset class that's going to sit there. But think about people that put money in 401ks. Do you have access to a 401k? If you're 35 years old, working for a company, you're putting money in a 401k, you don't have access to it for the next 30 years, 25 years.
That is a personal frustration of mine
Yeah.
because
But
it's one of those that you don't have access to it.
yeah, you don't, you, I
Can't
guess
lose it.
you can get a loan against it up to $50,000 one time. There's all these restrictions, right? It has to be paid back. If you quit, then you have to pay all that money back, or in other words, is a penalty. Just a lot of different things go on with 401ks that people will blindly put money in. Quite frankly, now the government's made it so that you will put money into it unless you opt out. So if you start a new job, you automatically are enrolled in a 401k. Again, there's no intentionality there. And people with their money need to have some intentionality. People need to have a little bit of intentionality. In other words, why are they doing what they're doing? I don't know, just because it sounded good. But then they get the results they get, and then they're mad because the results are awful or they lost money. But what did you do intentionally to grow that money?
Yeah.
Did you ask all the tough questions? I love the people and say, oh, they want to know everything there is about a whole life insurance. I'm like, it's the easiest thing in the world. But you want to complicate it, but then you don't ask that question on the other side when you put as much money as you do into your 401k. So all I would ask is that you be fair and ask reasonable questions on both sides of the equation. Again, I don't mind people that want to learn and grow. Where I find it, like, why I won't even enter into a conversation. I won't entertain somebody that just wants to enter in for an argument's sake. Because I'm too busy to have arguments. I would rather entertain inquisitive, people that have doubts or have concerns, but they want to learn and they want to understand. So anyhow, I don't know if that really answered your question, but I think it was about what are some of the areas that people have doubts, probably, right? If you're willing to learn, if you want to take some time to understand it, I have all the resources you need to learn and watch and grow, and time to answer some questions. But I also want people that are willing to learn. So.
Yeah. And like you said, questions are good because then
Questions
you
are
can
great.
educate. It's just when they're very narrow-minded and just, this is how it's always been done. I don't want to know about anything else. Everything else is a scam.
Yeah.
When it,
And how do you grow? How do you grow with that?
you don't.
You don't. And again, I can't change that in people. All I can say is like, hey, if you want to grow, I can help. I can empower you. Again,
Yeah.
I don't want to do for you. I want to empower you to grow and get educated. And when you're ready, if you're ready, then we can work together. I've been in this game, in this business for 35 years. I'm at probably a midlife crisis now where I'm halfway point in my career, right? So I got time. So educate yourself and let's talk later when you're ready. So, because everybody has, that's the whole thing too, is like everybody has their own timeline, and I'm okay with that. I quite frankly, I've been around long enough to know that when people are ready. If I force it and have them go sooner, then it's tough on them, it's tough on me. They're not happy with me, I'm probably not happy with them. So I understand that it's got to be right for everybody, but also the right person has to be there on the other end of that as well. So we have to have a good alignment. And quite frankly, I've had some people come that I think are great people. They just weren't ready. And it's, 5, 6, 7, 8 years later, they're coming back and said, hey, that thing you talked about? Let's talk about it again. I'm like, fabulous. Let's do it. And I love being in that position. Now, I want to make sure that if you want to know and you want to understand, I have enough material so you can make a decision quicker. Because the quicker you get into this, the quicker it changes your life. But you have to be ready.
That makes sense. So when you're talking like stock market and how the worst case scenario is the zero,
Right. 100% loss.
what is the biggest risk when it comes to whole life?
The biggest risk is not participating. And what I mean by that is we are part of a select, very elite select group. Those that can, qualify to get life insurance. Not everybody can. Those that can understand how to use a policy, and those that have the money to do it. That's the biggest risk. And if you can meet all three of those, and then you don't take action, that's a huge risk. It's like an unknown risk, right? It's like the lost opportunity cost. If all those things are in line and you can move forward and you're healthy enough and you can qualify and you have money and you can be educated and understand it and you can move forward and you have a team to help you do it and you don't move forward, you don't know what you're missing. And we actually have some material that I love that we shared at a mastermind last November where we talked about what's the risk of not moving forward. And it could be, let me just ask you this quick question. If you look back over the last 10 years and all the income that you earned over the last 10 years. So I'm going to use this quick example. Let's say you had $100,000. You earned $100,000 for 10 years. $1 million flowed through your hands. How much could you write a check for?
Not much.
On average, and again, we've done this exercise. On average, it's less than 5% of all those dollars. So the $1 million that flow through your hands, people can write a check for less than 5% of those dollars. Now, take that going forward. Over the next 10 years coming forward, how much money is going to flow through your hands? Hopefully you get a raise. Hopefully you're smarter, you're more seasoned, you're getting better jobs, better positions. So maybe it's $200,000. So now it's $2 million. You want to be in the same position 10 years from now as you are today. And so people that don't take action are going to end up with the same results of the last 10 years in the next 10 years if they don't take action. That's the biggest risk because, again, we're talking about a guaranteed asset, but the product isn't the most important part. It's the mindset before the product. To get educated, take action. That's the biggest risk. People, I see this all the time. People want to be educated and they know all there is to know about this, but they never take action. And that's harmful. That hurts because they have, all they have to do is take action and implement this. And they don't have to implement it all at once, 100%. They could ease into it. But again, over the next 10 years, if you're going to earn more money, get, bigger raises, higher income, you're smarter, you got better assets, hopefully each year as it goes along, but you still don't have access to cash any more from a percentage wise than you did from the last 10 years, then you're not in a better position. So that's the question we ask people is like, that's the risk you take is the risk of inaction. Because again, I can still tell you, if you put money with us, you put money in a policy, I can tell you what the very least is going to be. I can tell you what your exit strategy is 30 years from now. Wall Street can't tell you that. No, again, they might have a better pro forma that shows you, hey, we're going to do 12% every year for the next 30 years. Is that realistic? No. Is that just made up BS? Yep, exactly what it is. Where I can tell you what the least is going to be. So,
and it's not guaranteed.
Not guaranteed because again, we're not an investment. We're a guaranteed asset. That's the part of your balance sheet that's so valuable is that guaranteed asset. So which allows you, kind of gives you the permission slip to go out and do those what I would call riskier investment type of things because you have a guaranteed asset on your books. It allows you to sleep at night because you know that you have part of your assets are there guaranteed. So now I can go take risk. Or if I decide to retire tomorrow and the market goes down 50%, I'm not scared to death because I already know I have a guaranteed asset that's sitting there willing to pay me until my money in the market comes back. That's the beauty of what we do.
And I think that education piece is, at least for me personally, is like the biggest part that makes me go, okay, this isn't a scam. Yeah. Because I'm one of those where I evaluate risks. Like I've been in the P&C insurance world, so that's just part of it. So I sometimes struggle wrapping my head around like, once people learn about this and what it can do, why would they ever look at a 401k? I get everything serves a purpose, but like, that's the point that I've gotten to where I'm like, okay, now I don't understand that. Like, why is that the common thing and not this?
Well, yeah, you hit the nail on the head, common versus uncommon. Mm-hmm. If you want common results, if you want the results everybody else is getting, do the common thing. If you want something uncommon, you're going to have to do something a little bit more uncommon. That's going to take a little bit more education, and then just doing things a little bit differently. It doesn't have to be radically different, quite frankly. I get why people put money in the 401k because A, they're forced to right out of the chute, but B, it's easy, set it and forget it. We're in the Ron Popeil world, right? Where we set it and forget it. But if you set it and forget it, then who's in control? Who's truly in control? Are you in control if you have a set it and forget it system? Somebody else is making those calls for you and you're just blindly going along and you're going to get those results. And then when things don't go the way you want them to go, who's to blame? We have to look inward before we look outward. So again, there are people that's what they want. They don't want to educate themselves. They don't want to pick up a book. They don't want to listen to a podcast. They don't want to. And again, people that are listening to this aren't those people because you're listening to this podcast, right? It starts with the education and the mindset. But as I look across the audience and people that are like, Why would you listen to a podcast? Why would you spend an hour sitting through, we just did a deep dive talking about just the different aspects of policy loans. Why would you sit through that? Because again, you want to know what your financial world is in and how to maximize it. The best investment a person that probably has a net worth less than $3 million can make is an investment in themselves. Investment in your education and your growth is probably the best thing you can do. If you want to go from a million or from $100,000 net worth to $1 million net worth, the best and the biggest return you can get is investment in yourself. Educate yourself, not just through traditional education, but think about what is it I want to accomplish and what education will help me achieve that. And that will get you from $100,000 to $1 million the quickest. And go from $1 million, it's going to take a little bit different effort. It's going to take a little bit different actions, a little bit different style to go from $1 million to say $3 million of net worth over your life. And so what got you here today isn't necessarily going to get you where you want to go tomorrow. And that's why you need a guide. That's why you need somebody like me to, not that I know it, but I'm just like that upside observer. I hear what you're saying, and I've had some years to understand what you're saying, where you're going, and I got some suggestions, and I can educate you, and then I will help you, empower you to take some action.
That is awesome. I can't.
Was that a long answer to a short question?
I've enjoyed it because, I mean, there's a lot to it that people don't understand. And when they don't understand it, it creates fear and hesitation, where your goal is to educate and give a little bit of certainty in an uncertain world.
Yeah, I think it was Dale Carnegie wrote, confused mind takes no action. And he also wrote, I think it was to win friends and influence people. He also wrote, a person convinced by against their will is of the same opinion still. And what he meant by that was, my job isn't to convince you of anything. Because if I'm convincing you, you're not going to move forward. My job is to educate and lead. And part of leadership is understanding what your situation is and giving you the tools and understanding of how you can go grow, kind of be the director of your own movie. People have asked that, like, how do you sell, Wade? I'm like, selling is just education. It's education and leadership and empowering people to do what they want to do. And again, if their values aren't aligned with my values, I'm perfectly fine. That's a 100% positive outcome. So again, I'm not here to sell. I'm not here to convince anybody of anything. I'm here to help educate and then really give you the tools and understanding on how you can move forward.
I love that. Well, thank you. I think I thought it was extremely helpful just to dive into why people might think the way they think and debunk some.
No, I appreciate it. It's really a good question. It's a series of questions because it's what a lot of people think. There's like, what am I not understanding? What's the catch, right? I'm the same way. Anytime somebody is approaching me with ideas like, what's the catch? What am I not seeing? What's the next fork going to drop? So then what do? I'll typically just dive into it. First, I want to make sure that the person I'm dealing with has some good character, good individual to be around. And then also understand what is it they're saying that I don't understand, and then go get educated on that. And when you start from that approach, again, that's a whole different, then you're like, okay, now I'm making an informed decision versus just making a decision based on this is what the crowd is telling me to do, so therefore I'm going to go do it. So I appreciate those people that ask questions, generally ask questions with an idea of like, I want to grow and understand, but not to, I don't mind being proven wrong. I've been wrong a lot of times in my life. And I'm also willing to grow and understand stuff that, I've said no to a lot of stuff for 10, 15 years. And then finally it's like, now it makes sense to me. And now I'm ready to move. So I get that. I get where people are at. A little bit of skepticism is a good thing, but skepticism with the heart and desire to learn is even better. So, well, thank you so much, Beth. I appreciate the question. I look forward to these conversations going forward. We'll be doing this, I think, on a regular basis because I love hearing kind of like your take. Again, sometimes I've been in the business so long that I kind of forget where people are at. Again, whenever you're in your own industry, you think everybody knows what you know, and that's not always the case. And so I love a fresh perspective. I love, if you got a topic, you got a question for Beth to ask me, I would love for you to throw it in the comment section. We'd love to hear what your questions are. We'd love to be able to have that conversation around what those questions might be. So put it in the comment section. We'd love to be able to have Beth, beat me up as much as she possibly can. So
Happy to do so.
All right. Well, thanks so much. I appreciate you.
Awesome. Thank you.
All right.
Thanks for listening. The first step to something better is seeing it differently. Stay sharp, stay focused, and we'll talk again soon.